So the whole purpose of accounting is to produce financial reports. So the accounting process we've looked at so far was actually missing a really important step. What we're going to have is step one, transactions occur. We've learned that we're going to record those in ledgers, in the general ledger. What we just learned is that that goes in the trial balance, and what we're going to do now is prepare our reports. So for this topic we're going to do balance sheets and income statements. So looking at that, it's actually quite simple once we've got a final trial balance. What we can do now is prepare an income statement from all the revenue and expense accounts, and a balance sheet from all the assets, liabilities and owner's equity accounts. So I think the first step is to go through each of the accounts in the trial balance and label them as to whether they're an asset, liability, owner's equity, revenue or an expense. What we can do now is prepare an income statement. So we're going to start with our revenues up the top. So revenues always have a credit balance, so we're only going to look on the credit side, and we can see that there are sales of $5,700. What we're going to do now is less away our expenses. So the first expense we start with is what's called cost of sales, and expenses have a debit balance, so we're going to look on the debit side for that one. That gives us what's called our gross profit, and then what we'll do is take away what's called our other expenses. So we can see on the debit side there's rent, advertising, postage and petrol. That'll give us a net profit of $100, so we're going to need to remember that figure. So the net profit for the period was $100. And what we can do now is use the remaining ledgers that we haven't used to complete a balance sheet. All these accounts will have to go on either the income statement or the balance sheet. So we'll start with our current assets. So we've got the cash, stock. We ended up with a GST refund and some debtors. That leaves a non-current asset of the delivery van, and we'll total that up and get total assets of $30,220. On the other side, we'll start with our current liabilities, which were creditors. Don't have any non-current liabilities. What we've got is owner's equity or capital of $30,000. So a slight change is the format of the owner's equity section. What we're going to do now is actually add a couple of steps into this. So from capital, the balance that you see, we're actually going to add in the net profit. So we figured out we had a net profit of $100. That equals owner's equity of a total of $30,100. However, owner's equity also goes down. We can see that we're still left with one account over here called drawings that we haven't used. So what we'll need to do is then subtract away drawings of 1,000 and write that new total in the right-hand column, which is $29,100. We'll then add that together with our current liabilities here, which were creditors, and we'll get a total of $30,220. So looking at the relationship here, we're going to change the owner's equity section a little bit. We'll start with capital, and we've learned that the whole time revenue makes owner's equity go up, expenses makes owner's equity go down, so therefore net profit actually will increase owner's equity, so we'll add it in to this section and write a little subtotal. We'll then subtract away our drawings, and that'll end up with a total balance, in this instance of $29,100.